Welcome back to America's Commercial Real Estate Show. I am Michael Bull. This segment's brought to you by BOMI.org. That's BOMI. They are the industry standard for training for facilities and property management. Check them out at BOMI.org. Well, today we're talking about the office market. Next, we have a great guest in studio. It's Mark Vollbrecht. He is principal with Zeller Realty Group, and he's here in Studio One. Mark, thanks for being with us.
You're welcome. Good to be here.
So you guys own, manage, operate a lot of office properties around the country. And I think it's interesting, you know, when we talk to analysts and economists, we get their view, but you're in the trenches, you're there every day. What are you seeing for the office market overall today?
Office market is healthy right now in that our customers are really seeing office space as a necessary tool. There's been times in my career that it's been perceived maybe more as a necessary evil.
Yeah.
But you know,
and now it's a tool.
It's a tool. It's almost as simple as you look at the unemployment numbers and you realize that there are not enough workers, skilled workers, to fill the jobs available in office buildings. Mm-hmm. And so customers, tenants are using office space, their environment, as a way to recruit and retain talent. And that's a little bit different. I think people have always used that to some extent, but now it's really come to the forefront.
Yeah. And what are some trends you see there in design or in space usage that companies are being able to retain and recruit?
Sure. Probably the primary trend has been less me space, more we space. Mm-hmm. So less walls, opening up the environment so people can interact. In many respects, it's almost going back to an old urban trend of just people being on the street and bumping into each other, casual collisions that would happen. Mm-hmm. Well, since we don't walk on the street as much anymore, how can we produce that inside our space? How can we produce it inside the office building that we're at? So there's more interaction, more sharing of ideas, concepts, and trying to promote that by the environment, as opposed to obviously individual offices promote individuals working on individual tasks.
Yeah.
And so getting away from that and using office space to promote it.
Yeah, that's a good point. We have a game room here in our office with a pool table and darts and things. And sometimes the guys have their heads down and the ladies, and they're doing deals all day. But then they come in there and shoot a game of pool. All of a sudden now there's another transaction going to work.
Right.
And because they are together.
Yeah.
That's a good point. What about square footage per employee? It seems like we were cramming everyone in. What are you seeing for the latest trends there?
See, I think efficiency is still a key word, but maybe the definition of efficiency has changed, because just like what I said about office space as a tool, if you talked about metrics maybe 10 years ago, people were talking about, well, it was 250 square feet per employee, now it's 200. How much smaller can it get? I think I had my epiphany when I went to a large tech company in San Francisco. And I looked at their bench space. I'm like, wow, this is, I don't know, maybe this is one person for every 125 square feet. And the facilities person said, stop. We actually have another entire work space for each individual on this floor. And so rather than just looking at a bench, there was a beanbag chair someplace that was an alternative place for that person to work. So as you started totaling it up, it wasn't just the size of the bench, but if you included the increased common areas, the alternative workspaces, if anything, that ratio might have started coming back up as far as employee per square foot.
Yeah, that's interesting. You know, I haven't had or seen a beanbag chair in a long time. Are they coming back now?
Well, they're actually pretty comfy.
Yeah,
I bought one at Target not too long ago and put it in my office space. I kind of like it.
And you just kind of lounge back and then.
Well, we don't lounge. we don't lounge.
We're working hard.
Yeah, we're working hard. That's exactly right.
Well, talk to me about construction costs, because it seems like labor and materials have been steadily increasing. You guys are, dealing with construction costs a lot in your build outs. How's it impacting the business.
Yeah, it's really a fundamental impact across the board. One, because new construction, ground up office buildings, the newest products tends to dictate the high watermark for office rent. So you have the high watermark constantly being pushed up. And you're right, it's both labor and materials, and maybe labor even more so than materials in some cases. But then when you look at individual tenant build-outs, there's definitely a transition. I mean, you have a studio here that doesn't have a drop ceiling, kind of a traditional look. This loft look that you have here is actually very trendy, and people are going to that.
But it's not cheap.
Well, no, and people assume, well, geez, I don't put a drop ceiling in that saves something. I said, well, no, you have to take the old ceiling out. You have to put some kind of acoustical members up here. You actually have to make that area look good. You have to change how the plenum works. There's a lot of other costs that go with it, along with sprinklers, distribution of power. And really what we're seeing, because there's this change of how people are working, that means people need to change the office environment, which means construction. And so we're seeing higher and higher build-out cost. We're seeing longer and longer lease-up terms, or lease terms because of that, because there needs to be a way for either the company or the landlord to amortize those costs over a longer period of time.
So you're seeing TI packages or just overall costs that are what percentage higher would you say than maybe 3 or 4 years ago?
Oh, probably 20 to 30%.
Wow, yeah.
So pretty significant.
Yeah.
But we're also seeing rents that are 20 to 30% higher also. So it kind of equates.
Right. And so are you seeing a trend then towards longer initial terms on these leases? You said you're seeing some of that. Is that kind of an overall trend? I know a lot of companies that we represent on space, it's all about flexibility, and that initial term it doesn't create a lot of flexibility sometimes.
Well, but that gets back to the design of the space itself. Yeah. And as soon as you build a lot of walls, you create inflexibility in space. As you leave space open, you can move functions around, you can move furniture around, areas can kind of morph into whatever you want to. And if you really need a wall someplace in the future, it's pretty easy to build one. Actually taking one down, the demo cost, because of all the systems that are affected, is pretty expensive. Yeah. And so there is a level of flexibility because of the design that people are incorporating into space.
Yeah, so you're seeing a lot of 7-10-year initial terms versus 3 and 5.
Yeah, exactly.
Because of the construction costs,
Yeah, that's really what's driving.
The office environment is really an incredible place for technology from top to bottom. So with all the technology out there, what excites you the most that you're seeing in your buildings?
Well, actually, what excites me most is probably non-technology. And we can talk about...
The beanbag chairs.
Well, the beanbag chair. There's some heavy-duty technology to figure out how you get that piece of styrofoam to support a body like mine. But we don't talk about that. Yeah. When I say kind of anti-technology, we're actually introducing more people into our management process. Specifically, we have an employee, and her focus is manager of community involvement and development, to really get tenants to interact with each other, to kind of give tenants what they tell me on the way in. We want a more interactive community. Okay, if you want it, we're going to give it to you. Inside your space, that's your job to do it. Outside your space, that's my job to do it and the community's job to do it. So as we build things in amenities areas, we're adding a kegerator. So people can come down and have parties in that, so we can sponsor events, whether it be monthly, bi-weekly, where we're going to bring somebody in, possibly like you, and talk about what's going on in commercial real estate right now. There's going to be a lot of people interested in hearing an expert like you come in and talk.
And this sounds, I like this a lot, but it sounds anti-millennial, right? Everybody wants to be on their phones and use technology. Oh, no, you're talking about getting people together and talking?
Well, no, it's actually, it's very millennial, because if you really look closely at millennials, maybe this is the pendulum swinging backwards, that they have so much time spent on the phone that they're craving personal interaction. And they want it. And part of the reason why we hire a person or stage events is because they spend so much time on the phone, they really need an impetus to say, get off your phone. Come on over here, let's do something that's fun where you can interact. And I
like that.
Yeah, and it's really happening.
Yeah, I like it. So you're getting more return out of projects like that than you are investing in some of the latest technology?
No, I mean, you really have to balance. You don't want to be a one-trick pony. There's things that are really just low-hanging fruit that are simple, as in the advancements in lighting. Simply investing one time a changeover from fluorescent to LED gives you huge energy savings, gives you more flexibility with your lighting and what you can do. But that's a capital investment. Somebody has to say, we're going to spend money today to save money over the long term, provide a better environment. I'm not sure if that's sexy. Certain engineers maybe think it's sexy. Now, maybe what's a little bit more sexy is what that LED can then do, which is the next technology we're seeing being introduced to office buildings, both by buildings as well as tenants, are the use of sensors. Now, quite frankly, we all have a sensor that we walk around with right here, a little GPS device. So this GPS device can actually tell the building, I'm coming up to the building. I'm going to be at my workstation pretty soon. I like it 72 degrees, get my HVAC to 70 degrees. I prefer a warm rendering of light as opposed to a cool rendering of light. Now, a year ago, 2 years ago, I guess I would have to send an engineer and unscrew a light bulb and rescrew a new one in. With LEDs, you can actually change that rendering. With digital control on HVAC, you can make that adjustment without physically having to turn the thermostat.
Automatically, or someone still has to?
No, you can actually link it up with this. Now, it also gets back to, do I really need my employer to know where I am every second of the day? Do they need that information, and am I willing to share that information? Because employers are using it to also figure out, as we talked about the open workspace, and how to make the workspace provide functionality, what spaces are really being used? I mean, I would say, Michael, you have a lot of people working for you here. Do you know how much time each one of your agents spends at their desk?
Yeah, not enough. I mean, they're out and about a lot. So I'm like a lot of CEOs. I think that if you walk around your office and you see some empty space, you're like, wait a minute, I'm paying how much a foot for this empty space? It's like going to a restaurant that somebody's paying a lot of rent for to operate, and they're not open for lunch. And you're thinking, why aren't they open for lunch?
Well, and what you might find if you actually monitored your employees or the agents work for you, that they like a certain conference room better. They give more presentations in that conference room than another conference room. It might make you decide that if there's productivity from those people being in this conference room, I need 3 of those conference rooms.
Are you finding this type of technology is affordable now?
It's, affordability always gets back to what's the payback, right? Because something could be expensive, but if you have payback for it, then it's really not so expensive. So, because people have moved to digital controls in the most cases, the infrastructure is there. Because people have moved to LED technology, the infrastructure is there. Now, the addition of sensors, that's going to cost some money. The integration of that into a building management system, that'll cost money. We're not seeing a demand for it yet from users, but as we wanted to talk about where are things going, this appears to be where things are going. And most likely the early adopters are actually going to be the tenants themselves, and we'll piggyback onto their infrastructure. Because getting back to the use of the conference room, tenants want to know, if I've invested this much money in this space, are my people using it or not? Because I'm going to invest money in things that make my employees productive, things that they use, not invest money for things that just look pretty in a picture. Yeah,
well, that makes sense. And before you get out of here, I want to ask you what you're seeing in your buildings and the tenants around the country related to wellness. How many of the tenants, the corporate users coming in, is wellness an important factor, and are they willing to pay for it?
I've had this question come up actually quite a lot just in the past week. If we talked about LEED 3 years ago, because we want to make everything more energy efficient, WELL is starting to become very much of the conversation. And part of what we talked about with digital controls are actually that ability to provide a more comfortable space, presumably a more comfortable space. But this gets back to kind of a payback. The easy one is, for the last 10 to 15 years, the proof is there that if you can get your employees involved with a fitness program, that you're going to reduce your absenteeism, that you're going to increase their productivity, that you can lower your insurance premiums. It's a real simple metric that you can start measuring. Now, as we take it to the next step of WELL, what's the measurement for that? And what's the payback for it? But based on this topic coming up a lot lately, I'd say that momentum is going in that direction, and we tend to go in the area of momentum.
Yeah, what your tenants are concerned about, right? And,
right.
It also helps with retention, productivity, obviously, and especially as we have more people and less space. So I think if you run a business, I think you definitely want to think about wellness.
Michael, don't say more people and less space. That's not what I said. More people, more space.
The CFO wants more people and less space. They want to keep costs down.
The CFO wants less turnover and less recruitment charges.
They want everything. All right. Well, Mark, thanks for being with us today. We appreciate your time and great information.
Sure.
Thank you.
You're welcome.
Stay with us. We'll have more on the office market. We're going to talk about some technology, and we're going to talk about some marketing. Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show.